Hey everybody, what's going on? It is James here with Crypto Common Sense, and I've got a quick video for you today. So one of the things that I talk about a lot in my videos, and I think the thing that is probably most critical to understand when you're looking at any technical analysis or any chart, is the idea of supply and demand. And so I thought I'd give an example today that I've actually given in the past, but I know that most people either skim or skip around videos, and so they miss some of the little golden nuggets that are hidden here and there. And so I'm going to break down some market action from 2019. Then I'm going to talk about today's market action. I'm going to show you how they're similar and what to watch for. So back in 2019, of course, I was one of the few people that were bearish on Bitcoin. And I was looking for those lows down around $3,500 to $4,200. And in the latter part of 2019, I kept looking for this move up that was a temporary move up before further downside. And then ironically, for those of you that have been following me for a long time, you'll remember what happened was I got impatient. I said, well, I guess the move's not coming. And I ended up getting short on Bitcoin and then got, just wrecked when it finally happened. It just took longer than I expected. And that move I'm talking about is this Z pump, as it was nicknamed, in October of 2019. That's when people were pushing the narrative that China was going to somehow endorse Bitcoin, and so it became named after their political leader. But when we look at this, what really happened was Bitcoin consolidated in this range that you can call a symmetrical triangle. You can call it a descending triangle if you want. You can say this is the bottom. Whatever you want to call it, doesn't matter. It was a range. Bitcoin consolidated and then broke south of the range. It came up for a bearish retest. And so we had this zone of supply that was basically through this area here all the way up to really around this ballpark here was the zone that I was looking to be retested before I got impatient, right? It was down here. It was kind of consolidating around 7,500 or so, and I kept saying, well, I think it's going to move up to, retest 9,200. And then when it started to go lower, I got FOMO, and not FOMO like a bull, but FOMO like a bear. I thought, oh gosh, it's going to move down without me. And I got short and then got just smushed, right? It moved up and just smushed me. Ended up losing several percent of my trade fund in a single day, which was a complete deviation from proper risk management and, just really silliness. But the point being, it came, right? The move came because that's what happens in markets. Markets eventually retest areas of supply and demand. It's not 100% guarantee that every single area will be retested, especially in the case of an asset that goes to zero. There may be areas of supply that never get retested, and an asset that goes parabolic and just goes up, 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 there may be areas of demand that never get retested. But more often than not, you do retest those zones. And it's only after you clear those zones that you can start to develop, a bias to the other side. So for example, here, the one thing that I did do right was after I got wrecked on that short, I did turn around and take new shorts after, right, this candle closed up here. I ended up getting short around $9,500 or $9,600. Unfortunately, I didn't make all of my money back because, again, I used bad position sizing down here and lost more than I should have. But I still made some money back, and it ended up working out fine in the long run. I learned from it. But what happened was this came up, it retested this zone of supply, and then left this big wick behind, which was actually a very, very bearish sign, even though at the time on social media, most of the larger follower accounts were actually screaming that the bull run-in started and that we were going to be going to $100,000 Bitcoin, right? There's so many of those people on there talking about, if you're not in now, you've missed the bus, you've missed the train, all the stuff that they say to really scare people into investing. And it really just comes down to those people want it to go up because they're basing their, futures on that. Like they might get rich if they have Bitcoin and it goes high enough. And so they want everybody else to buy it too. And so they start pushing those really hard narratives. And in some cases, they're actually being paid by exchanges. I saw an article last night where some of the crypto influencers, BitBoy was one of them, and this Jeremy, his last name starts with a G. I don't know either of these guys. I mean, I've seen like memes about them and stuff like that, but I've never watched a BitBoy video, so I don't know whether he's good or bad. I know what people say about him, which is not very flattering, and I've never watched any of this Jeremy guy's videos. At least not that I can recall. Maybe years ago or something I saw one, but you know, I don't watch anybody else's stuff, so I'm not in any way saying they're good or bad. I don't know, but I saw that they were including this lawsuit, and I guess a lawsuit suing them for like $1 billion, you know, which is pretty crazy. But this lawsuit basically says that some of these influencers are paid to promote projects, and I believe that some of them, I don't know which ones, are paid. In fact, I know that some of them are paid because as somebody with a fairly small following, I get offers every single month. Even now in the middle of a bear market, I'm getting offers offering to pay me to promote projects. And if you go back and look at my history, never once in 6 years have I promoted a project, ever. I've never taken money to promote a coin or a stock or anything. Never, right? Never done it. But I do know that the offers are out there. And a few years ago, one of the exchanges actually offered me a few $1,000s just to pimp their exchange in a video, right? And I just remember thinking at the time, wow, if they're offering me a couple $1,000 with only a few thousand subscribers, like how much are these big influencers actually making? And I would say they're making millions of dollars in some cases. So remember that. They're not out here looking out for you. They're not doing videos that are bullish because they're always bullish. I'd say half of those guys don't believe the stuff that they say, but they're being paid to push that bullish narrative. And so you have to keep that in mind. What I want you to take away from this video is the fact that look at this pattern right here. Consolidation, a break south, a bearish retest, and then of course, we all know what came next, right? This is when it fell from 10,000, right? And then ended up going all the way down to $3,800, right? Here was a little pump back here. Came up and retested this zone, and then right early 2020. So look at this now. Compare that. This is a daily chart. Compare it to this. This is what I was talking about for the last 12 months. I kept saying, you know, it's strange to me that Bitcoin hasn't come up and retested 28,000 because that's an area of supply that should be retested. And I did previous videos comparing this to that 2019 scenario, saying that I learned my lesson. I will not be impatient. I will not FOMO into shorts because at some point I believe this will come back up and retest 28,000. That's what I was saying. And guess what? Why 28,000? Because that was an area, like I talked about in the previous video, it's an area of supply. We broke below it. A standard market behavior in a bear market or a downtrend is you should break through an area of supply. You should come up and retest the area of supply. And if it's a bear market, you will continue our downtrend. You will continue your downtrend. If it is a reversal, you should break through the area of supply and actually come down and retest it. It will flip to demand and you should move off of it and have your bull market, right? That's what you should see. One of those two scenarios is what you're looking for. Now, some people will say, well, I don't want to wait for it to get to 35,000. That's a big way. I'm missing a big part of the move. Well, I don't know what to say. I mean, that's the way it works. It doesn't mean you can't get in earlier, but if you're going strictly off of supply and demand, you need to clear that zone of supply before you can call it demand. You go through support and it flips to resistance. You go through resistance, it flips to support. You can try to zoom into a smaller time frame and look for, you know, tighter trades. One of the lines in the sand that I talked about, who knows how many times over the last several years, was that 19-week moving average. I talked about it time and time and time again. 19-week moving average acts as a line in the sand for Bitcoin. When you're below it, it tends to denote that you're in a bear market. When you're above it, it tends to act as support in a bull market. Well, watch. Right? We won't go all the way back, but you can see it just rides on top of it in a bull market and then rides below it in a bear market. And yeah, sometimes it chops around like this area through here. But typically speaking, when you're above it, if you can get a retest, for example, right here, break, retest, that's a bullish retest, right? You flip through support, go through resistance, it flips to support and bounce off of it. So if you wanted to trade, again, there were trades there. You could have said, look at this. It's retesting that 19-week. I'm going to take that as a sign I want to get long. Or you could have done something like go to the 200-day moving average and said, look, it's cut through that 200-day moving average, and I'm going to use that as a reason for a trade. So there's your 200-day. Bam, right? Breaks through it. Got to turn it on so you can see it. Comes back down for the bullish retest, and you could have been long down here. And again, this is a trade that I talked about in one of the previous videos. Like if you were getting long just off of, hey, I'm retesting that zone, I'm going to use that tail as a stop loss. That's how you get in earlier instead of having to wait for you to clear that whole zone, right? And then what you do is you can put a trailing stop on this. And if you were using a trailing stop, there's a very good chance that you'd still be in that trade, and you'd be up right now at the current mark. You'd be up about 9.95 to 1. So you'd have breathing room. And maybe you could say, well, I'm going to set a stop loss down here. And if I get kicked out, then I'll still make 5 to 1 on that trade. Or maybe you could say, hey, I'm going to just, with this big, beefy candle, I don't want it to retrace below the bottom of that candle. And then you get kicked out for 7 to 1 if it starts going down. And if it keeps going up, then you just keep moving that stop with it. That's one way to do that. Okay? So you don't have to necessarily wait and say, well, I got to wait. James says it needs to clear this zone. No, if you want to get bullish, just zoom in, right, and find those opportunities. But I think if there's one thing that would save most people from getting smooshed, right, that's my word of the day, it's just understanding these zones. And I talked about this a lot in 2021, especially after this weird double top that we had. When we got up into the zone, I talked about saying, look, until we clear this high back here at 65,000, like, this is bearish. This is probably going down from here. This is probably double topping. And of course, a lot of people disagree with me, but in hindsight, there I was. And I'm not saying that I'm 100% correct or that I have a crystal ball, but I think that a lot of people who are bullish, and especially perma-bull people, I think a lot of them tend to write me off because I've had a call that was incorrect here or there. Well, I hate to break it to you folks, but nobody's right 100% of the time. And my track record over the last 6 years has been pretty damn phenomenal, right? I called the $3,200 bottom in 2018. I called it 7 months in advance. I called the $4,000 lows in 2020. I called them 9 months in advance. I called this top in 2019. Less of a call on this one, more of a, this may be what's happening, hitting, this all-time monthly high plus the golden pocket, right? So that one we won't count that one. But I called these lows. I called this low. I also, in August 2019, when I called this low, said that after this low, it should move up to 50 to 75,000. And again, COVID threw me off that game. But, and then even back here, I was saying, look, we're probably moving back down to 8 to 12,000. Whereas other people were talking about 200,000, 250,000. And no, we didn't get to 8 to 12,000 yet, but we did move down to about 15,000, right? Which is a hell of a lot closer to 12,000 than it is 200,000. Where are all the people calling for $1 million Bitcoin? They're still out there with 500,000 followers, 1 million followers, making gajillions of dollars, causing people to FOMO in. I'm over here in my quiet little corner of the world, just doing what I do. Which one of us was correct about this? It certainly wasn't them. So I'm telling you now that until we get through the zone, you need to be very wary. Doesn't mean you can't be bullish. Doesn't mean you can't take long positions, all that sort of stuff. But you need to be wary, okay? And you need to be paying attention because standard market behavior is indeed for that to be a bearish retest, for it to come up, hit it, and go down. But again, in all fairness, the same can be said for the 200, right? 200-day moving average, right? This was a bullish retest, boom, 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 up. But it's a daily chart, not a monthly chart. And you can also say the same thing for the 19-week moving average on the weekly, right, where it hit it here and started to move up. So these could be bullish scenarios. But when I look at a daily chart and a weekly chart, I'm thinking, okay, this is the scenario that sends me up into the supply zone, right, on a smaller time frame trade, maybe a swing trade. And when I look at a monthly chart, that's a chart that I say, hey, this is a macro level chart. This is what denotes we're in a new bull market, or this is what denotes that we're in a bear market, etc. And once you understand those zones, you can apply those to every single chart that you want to invest or trade. And suddenly it becomes very, very easy to make money. Very, very easy. Okay, look at this. So weekly chart of Bitcoin, and I don't make this video too long. It's already longer than it should be, right? So back here you have all these tails, which is a sign of what? We're talking about this. It's demand. So if you pull that over, see how you could have used that and said, okay, well, it's testing demand. Doesn't necessarily mean there's a new bull market because it's just a weekly chart. But it would have been reason to look for longs through here, not shorts. And then you could have maybe got some of this move up here. And when it got over here, you could have said, hey, it's retesting supply back here. And instead of looking for longs, like a lot of the self-proclaimed gurus, you could have been saying, maybe I should be looking for shorts. And you could have rode some of this move. Right? And you can do that on every time frame. You can zoom into a 4-hour chart on any asset, stocks, crypto, forex, precious metals, it doesn't matter. And then you look for those zones. Okay. You also look for things like this. This is a liquidity gap straight down. Oftentimes they want to come back up and fill those in. Like this, liquidity gap. Oftentimes they want to come back down and fill those in. Right? There's all these little nuances, but they all revolve around supply and demand. Once you understand the supply and demand, then you can look at the chart and you can say, I think I have an edge. It doesn't mean you're going to be right 100% of the time, like I said. It means you have an edge, right? Let's say that you only have a 5% edge, that you have a 55% chance of being right and a 45% chance of being wrong. That's all you need. In fact, the reality is this, and I've talked about this in the past, if you are making 3 times as much when you were right as you were losing when you were wrong, you can be wrong 70% of the time and still be wildly successful. You don't have to rely on luck. You don't have to rely on being in the right place at the right time. You don't have to rely on, hey, my favorite guru said I should buy this altcoin that he didn't disclose he was being paid $10,000 to promote. Right? My favorite rapper got paid $50,000 to promote this pancake swap, but he didn't tell anybody. I bought it and lost all my money, right? How many of those did you see? A lot. Okay, there's a whole lot of people, and I know that for a fact because I have friends that did pancake swaps, launched their own tokens, and they were telling me behind the scenes how they could buy these rappers' endorsements for $25,000. It's all smoke and mirrors, folks. Learn to read the chart, learn to recognize supply and demand, base your decisions off of that, base your trades off of a mathematical system of, hey, I can be right this much, and that's all it takes. And leave all this hocus pocus, smoke and mirrors, guru nonsense about it's going to a gajillion billions, trillion dollars, right? Half these guys don't even understand basics like how a market cap works, right? You got people out there talking about Doge going to the moon. They don't understand that Doge is an inflationary coin, right? There's so many Doge that they're out there talking about it being worth $5 and stuff. You go look at it and the market cap's so big it's not even feasible, right? Unless they burn a bunch of Doge. So, yeah, I'll wrap the video up there. Again, hopefully the sound quality is improved. I've been tweaking this microphone over the last few days, getting it dialed in more and more. And, I don't plan on doing videos every single day or anything, but just as I work with the microphone, I thought it would give a good chance to get it dialed in and also do some free content for folks. So hopefully you enjoy it. As always, please remember I'm just some guy. I'm sitting in a spare bedroom. That obviously means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. If you enjoyed this video, give it a thumbs up now, subscribe to the channel. And by the way, if you have friends who you think would enjoy this content or who would benefit from a more level-headed view of the markets, feel free to share the link with them as well. This is James with Crypto Common Sense, reminding you to please trade safe. I'll talk to you soon.